Hello everyone and welcome back to my channel. In this new video, I'm going to do another trade breakdown of the second trade I took last week. It was on the Canadian dollar against the Japanese yen. As always, I use my easy bread and butter strategy. It's so easy that you can learn it by just watching this video. If you want more details about it, of course, you can always check my playlist. I'm going to put it down in the description. Alongside the trade breakdown, I'll teach you how I used ICT, Advanced Market Structure, in this trade. If you watch the 2022 mentorship, I'm pretty sure you found the episode number 12 a bit challenging and hard to understand. Today, I'll simplify that. Also, I'm going to show you how to use the inversion fair value gap to determine the bias and the change in market structure. So make sure to take notes on this one. So if you're interested in all this, make sure to hit that like button and subscribe to my channel so you won't miss any upcoming videos. Let's get started. First thing first, transparency. So I shared that on my Twitter account and you can go and follow me here. I share outlooks, the pairs I'm watching, and of course charts. So here you go. Enter it from here and exit it from here. For this presentation, I'm going to use FX Replay. You can always go and check it out. You can use the coupon code STRANGER for 15% off and 5 days free trial. And for our trading plan, we're going to use this one. I'm going to explain it to you briefly here. So we're going to use the first thing, buys. We're going to use weekly, daily, or 4 hour. So not all, but we only need one of them. So in this case, we're going to use the daily, and we want to see expansion, and we want to see price goes from a fair value gap to a swing high, right? In the case of bullish expansion, or a fair value gap to a swing low in case of a bearish expansion. Or we want to see a swing high, so price takes an old swing high or swing low, leaves a fair value gap behind, and we want to see a retracement. That's for a buy. So we're going to use only one of these two. The second thing is we want to see a confirmation, right? We're going to use the 4 hour or the 1 hour or the 15 minute, meaning when price is in that fair value gap and we want to see a move to that swing high or swing low, we want to see a bullish or bearish market structure shift. So displacement to the upside or the downside toward that target. All right, and we want to see a market maker X model, so consolidations to target. And the last thing is we want to see the same thing on the second step. We want to see it on the lower time frames, meaning a displacement. But in this particular step, we're going to use a time window. So 2 to 5 we want a kill zone, and 8 to 12 New York local time, and this is the New York kill zone. So the same thing, a market structure shift, displacement toward our target. All right, so if you want more details, you can always check my other videos. And now let's start. So before I start annotating the chart, you can always pause this video and try to annotate what do you see in this chart. What I can see is we have this fair value gap right here. So this fair value gap, this is a bullish fair value gap. This one should have offered support here. It did offer support, but we broke it. And now we pierced through it, and then we can expect it to offer support. So guys, when you draw your fair value gaps, don't just delete them after the first invalidation. All right, leave them, because they will offer support or resistance in the future. And we also have this fair value gap, right? So the first step is internal range liquidity, so fair value gap to external liquidity to swing high. And we do have here fair value gap, so internal liquidity, external range liquidity. We want to see a move from here to here. And we also have this fair value gap, this inverted fair value gap, as a confluence of price to go to here, right? We have also this inverted fair value gap right here, small one. So we have multiple confluences of going to the upside, and this is how you get your buys on the daily time frame. So here you go, the day ended, this daily close, so this daily candle, and we have that fair value gap, internal range liquidity. Let's draw it here. So the idea is when price retraces to this fair value gap, internal range liquidity, we want to see a 1 hour market structure shift toward this targets right here. So this is a draw on liquidity. And now let's move on to the 1 hour and see what's going on. So here's the daily fair value gap. So in this piece of price action, we have a really interesting structure, right? Can you pause the video and annotate what do you see in here? So first of all, we have multiple concepts in this area right here. The first thing we can see that we have a market maker buy model, right? So let me annotate it for you. Here's that original consolidation. Here's that second distribution of shorts, and we have another one right here. So this is a market maker buy model. We're going to use this to target, and as you can see, we have a lot of filled swings right here. So we have a lot of liquidity. This is called low resistance liquidity. Now, can you see something else regarding advanced market structure? You see this low right here, this swing low. This is a long-term low. Why? It has a short-term low to the left of it and a short-term low to the right of it. So this, and it also formed inside a daily fair value gap. So this is an extreme low. It formed at the extreme, right, of the fair value gap. And right after the formation of this swing right here, this short-term low, we can confirm that price is not going to reverse and take this. So this is a predicted low, and we have a displacement to the upside. Just like our trading plan, we have a displacement toward that target, right? Leaving an order block behind, right? And now we can work with this on the lower time frames. So the idea is price returning to this, returning to PDRA on the hourly, and now we can look for another market structure shift, a displacement toward our target, right? So keep in mind, let me just label this as short-term and long-term low. So here we go. This is a confirmation that price is actually bullish, right? And our bias of going high, of going to the upside is right. So we have confirmed our bias of going here using this market structure, the consolidation side here, so as targets. So price is engineering buy side liquidity, right? And we have also this displacement to the upside. And now let's move on. And as you can see, price returned to that order block, price returned to that hourly order block, and now we can do the same on the 5-minute time frame. So let's drop down to the 5-minute time frame and see what's going on here. We don't have anything interesting, so we wait. We want to see a displacement, a clear displacement to the upside. And as you can see, we do have here, we have a clear displacement, leaving a fair value gap behind, right? So you can take your entry from here, your stop loss is here, and you can target this original consolidation for the 2 hour. And let's play that out. So as you can see, price is now going to our target, but I didn't take the entry from here, right? I missed this original entry, so I had to take another entry. So what I saw is another displacement. It's not that obvious, but it was a displacement for me, and we are also reacting from this 5-minute fair value gap. So I take the entry from here. My stop loss was just below this. This is an intermediate term low. Why is this an intermediate term low? Because it balances this fair value gap right here, and in a buy program we should not see intermediate term low get violated, especially after a displacement to the upside, right? And so my stop loss was here below this intermediate term low and below this fair value gap and this inverted fair value gap right here, or you can call it a BPR, a balanced price range, price offered sell side and then offered buy side here. So, and we have also this breaker block, right? I'm sorry, this order block. So my stop loss is protected by 3 or 4 PDRAs. So stop loss is here, and as always I targeted 2R, right? And let's play that out, and as you can see here, price hit my TP and also completed the market maker buy model, and now the market maker buy model is now completed and we have achieved our target. So as you can see guys, this trading plan is so easy. All you need to do is to practice it. It does require patience, I give you that, a lot of patience, but again, with practice you will eliminate these flaws, these human errors. The trading plan has a high win rate, but the human errors will hinder that win rate and you will not reach its full potential in the first month or even 2 months of trading this strategy. But if you keep practicing, maybe for 4 months or 5 months using this, you will see a really high win rate with this. So I believe we have come to the end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.